If you're trading without this indicator, you're literally leaving money on the table, trade after trade. It doesn't matter if you trade Forex, crypto, stocks, you name it, this applies to you. If you're new to this trading space and you're new to this beautiful face, I'm Carrie, and listen, I'm all about helping you to become a profitable trader this year and beyond. We want consistency, we want profitability, and that is really why I'm here to help you transform your trading and elevate your profits like never before. So without further ado, remember to hit that subscribe button. Remember to share this with a friend who is struggling to make profits consistently in the financial markets, and remember to drop your comment down below because I want to know how your trading has been going and how long you've been trading. Drop it in the comments down below. Let's interact with some traders in the chat. Now let's get right on the charts as I pull up everything to show you the stochastic and how you can actually use it to make profits day after day in the financial markets. Let's go. All right. Like I said, in this video, I'll be explaining what the stochastic RSI is, how it actually differs from the regular stochastic oscillator, and I'll be looking at the best settings for high probability trades. And of course, I'll give you a little bit of details on how I use it in my frequent trading analysis. So I'll drop that at the end. So if you want that bonus on how to kind of use it on your actual charts, like I do, then I'd suggest that you stick around until the very end of this video. Right now, first, let's really dive into what the stochastic RSI is. If you're new to trading and you have no clue what stochastic RSI is, it is really what we call a momentum oscillator that combines the concepts of RSI, which is the relative strength index, and the stochastic oscillator. So it's like 2 in 1, right? So, double trouble, I would say. So for me, I really love using the stochastic on my trades because it does provide a lot of insights on market structure and all of that. Right now, it really measures the level of RSI relative to its range over a specific period. Now, unlike the regular stochastic, which directly measures just price action, the stochastic RSI is essentially an indicator of another indicator, right? So it gives an indication of the market at a whole different perspective, in my opinion. All right. And, one thing I always say, don't just take what I say as gospel. Whatever I share with you here, just go and back test it. It's for you to go back test it, to prove it to yourself. And then, of course, go all in once you see it working for you. All right. So basically, the stochastic RSI works by taking the RSI value and applying the stochastic formula to it. This makes it more sensitive to price changes, and that's really what you want, right? And it allows you to spot potential overbought or oversold conditions much faster, right? Much, much faster. Now, like the regular stochastic, it oscillates between 0 and 100, right? So if you look at the bottom of my screen here where my cursor is, this is where we've got our stochastic RSI, right? And generally speaking, it really goes down at the bottom. Here is your 0 mark, right? And then we go to 100. Now, price can go over it, to be really honest. That is why we have these levels as overbought once we're above the 80 range here, and oversold once we're anywhere, below 20 thereabout. Right? So it's very simple. All you have to focus on is once you know that you're above this line here, you're generally above 80. So once you're above 80 here, right, you're overbought. And once you're below 20, which is down here, you're oversold. Okay. So really and truly, the stochastic RSI is best used to identify these overbought and oversold conditions. Whenever the stochastic RSI crosses, whenever it crosses, and that is really what the major thing you should look out for when it crosses above the 80. So if it's above 80 and you don't see any crossing, then you're still bullish. All right. But once you get a cross above 80 mark, anywhere above 80, then is the high probability setup for a potential sell. All right. Now, it suggests that the market is overbought, and maybe even if you're in an uptrend, there may be a pullback or a reversal at this time. Now, on the other hand, when the stochastic RSI crosses below 20, right? So if we're down here below 20 and it crosses below here, then that's an indication that the market is oversold and there is a potential for a bullish reversal. All right. Now, it's quite simple. Once you have this framework in mind, you're looking for the cross above the 80 or the cross below the 20 to know what you're going to be positioning yourself to, right? So unlike the stochastic, the regular stochastic, the RSI is much more sensitive, right? So you'll see more frequent signals, and this can actually be great for traders looking for quicker entry and exit points in the market, but also means there is a higher chance of false signals, right? If you're looking for those quick moments. But how I'm going to be showing you this, it's literally going to set you up for the victory that you want to get. And it's a little bit more of a long-term perspective, but it gives you a greater opportunity to make money in the markets. All right. So this is the best way to use the stochastic. I'm going to be showing you how to use the stochastic RSI really effectively. One of the best strategies is to look for crossovers. I could literally go into the indicators tab, right? And we want to add an indicator. Now with this, we're literally looking for the stochastic RSI, right? So that's the one you're looking for. Always remember that if you're doing trading view, you can literally click the star and add it to your favorite. So it will be on your favorites tab. All right. So we've got the stochastic, right? And with the stochastic that we've got, this is literally what it looks like. Okay. Literally, this is what the stochastic looks like. And I'm going to take a sneak peek into these settings. There is a default setting, right? This is the setting area here, and it's generally on 3, 3, 14, 14. The majority of individuals use this on a setting, but as I said at the end, I'm going to be sharing with you what you could actually tweak it as. I'm just going to be showing you the raw default version first, and then at the end I'll show you what you could tweak these numbers to kind of get some smoother finishes, especially on the lower time frame, right? For those who like trading on the 5 minute and so on. Now, with that said, I literally, want you to pay keen attention that this is what we call the stochastic RSI, right? And that's the indicator that you'd be looking for. It provides a lot of accuracy, I believe, if you know how to use it, coupled with market structure and price action. I tend to find that the stochastic works really lovely when the market is trending and it gives those signals. I'm telling you, my God. So let me break it down to you real simple, so that you actually understand when it comes on to the stochastic what you're looking for. Let's have a look at this chart here, all right? Because I like to break it down so that you fully understand. Now, we're currently here on USD JPY. This is the weekly time frame. This is one of the tips that I'd say when you're using your stochastic, get an overall picture of the market so that you understand what you're doing. So first and foremost, we're sitting at a support area because where price currently is, we had pushed up from here previously. So this is a support zone, right? Previous support was right here. Now, is there a potential that we can buy here? There is. So one, we're looking at price action and we're seeing that there is a support here, but we're now wondering, is this support going to hold? Now, if you pay attention to the stochastic, we're literally showing you that we are what? We're oversold, right? So what we're waiting on is the clear indication for the bullish momentum for us to go in for a buy and target this previous high. Because one, the key is what trend is the market in? And very clearly, USD JPY has been on an uptrend. So in this scenario, one of the key things that I look out for is what is the overall trend direction, right? What is the overall trend direction? So you're looking for that. And you're looking for that possibly if you wanted to go daily or weekly, no problem. But I go on the weekly time frame. All right, weekly time frame. Now, why do I do this? It gives me an overall picture of what I'm supposed to be doing correctly to capitalize on good profits. All right, so overall trend direction, I can see it's bullish. So that's telling me I'm only looking for buying opportunities. I'm not going to do a counter trend trade because quite often when I trade in the direction of the trend, I realize I make more money that way than if I try and counter the trade, right? Counter the trend. Now, all I'm going to be looking for now, so this is one, I already know that I'm bullish. I'm actually sitting at a support area. So I'm looking now on pure price action to see, are we going to hold at this support area and then push up. Now, stochastic is a second confluence here because guess what? We're sitting at the oversold level on the stochastic, right? So that's another thing that I can add, right? Sitting at previous support and the additional bit, the stochastic is at an oversold area. All right. So these are key things. Now, what am I looking for? I'm looking for buying opportunities. So the sign that I get now with price action, mostly what the candlesticks will show in connection with the stochastic, I'm going in for a buy to catch some moves to the upside. Right? Right. So we're currently sitting at 140. Even though this is on the weekly time frame, you want to get the indication of what market is doing. If you want to take a lower setup, like going down to your 15-minute, you can, right? But get some perspective from here, right? We've got the perspective, and what we're waiting for is for price to show us what it's made of, right? So now we're seeing what we're looking for. So far, so good, right? But we're waiting on the stochastic to give us a clear indication, right? Clear indication. Do you see that it's crossed over, right? If I zoom in on the stochastic, I want you to clearly see it. Yeah, see that we've crossed over, right? And now the blue is on top, right? So let's allow this candle to close. And we're in for the buy right there, right there. And if you want to say, okay, this is weekly and we want to go down, we're going to change the time frame and we're going to go 15 minutes or 5 minutes if you want to catch quicker moves. All right, so we've moved down to the 5 minute on UJ and we're looking for, that bullish setup. So what we're going to wait now for, because we've already got the indication from that time frame that we're going to be looking for a buy. So what I'm actually waiting for is the perfect opportunity, to take the trade. So what I'll be doing, as soon as I get the rejection here at this level, I'm in. Okay. Why am I in? Because I had previous support here where we went up, right? So I'd be taking, based on my stochastic, having this crossover. If you even want to wait on the 5 minute now for the full blue to be showing on top, you can. And then you can literally take your move, which is now, right? Which is now. So you're setting up a long position right here is your entry point. And you're going to target this high here. So we can aim for 1 to 3. 1 to 3 is always good for newbies. Yeah. So we put our stop a little bit below this area here, right? So that we've got some breathing space and we aim for a 1 to 3. Whatever the 1 to 3 looks like, that's what we're aiming for, right? And we're giving our trade some breathing room because we've got to have some breathing room. All right. Now, this is where we're entering. And we want to see if the stochastic is giving the clear indication. As I said, this is 5 minutes, so it should play out quicker and get us to our target to catch our 3% and be done with UJ and, clock some profits. So let's see if the stochastic is really working in our favor with this one. All right, let's see how it plays out. Nice. All right, we're pushing. So we came back and played that entry. Everyone sees that? I hope you're seeing it. We came back and played that entry. But guess what? The stochastic gave us the overall picture from the higher time frame. So we're holding and we're not folding. All right, we're holding and we're not folding. And you have to be mindful. That's why I use my 20 EMA, because what it does as well, the 20 EMA, which is the exponential moving average, it shows support. So what happens is that if we're in an uptrend and we're far away from the 20 as well, you're going to expect that it comes back. So this is just a pullback. Once it pulls back and there's rejection on the 20 EMA, we're going to push higher because we're going to get the momentum to push higher. Once it goes below now you take your profits and you can walk away. But at the same time, all right, like you see it playing below your EMA here, you just take your profits right here instead of making the market going back down with you. You understand? So clock your profits and get out. So you're using your stochastic, you're watching price action, and you're also using your 20 EMA as well. So that's the trick. All right, it gives clear perspective. Now with the 20 EMA, I'm going to explain that very clearly again. Once you're in an uptrend, you should be sitting above the 20 EMA. What will happen while you're sitting above the 20 EMA is that you're going to have some pullbacks. The further it goes from the 20 EMA, you're going to have some pullbacks. On the EMA, you're looking for rejection. Once you get that rejection, it means you're going to climb higher. Once we now start going below the 20 EMA, that's your sign to get out of the trade. Clearly, you would have clocked some profits right here. Even if you didn't get your full 1 to 3, you would have got more than 1 to 2. You would have caught more than, more than 200 pips on this move. And that is enough to be grateful for. A lot of people aim for less. So if you get something like this, trust me, you're trailing your stop along the way. And once the trade is going in your favor, you reduce your risk, being it risk-free, and you even move your stop loss closer into profits. So after this pullback, after it pulls back here, now your stop becomes here. Once you see it climbing higher, so you keep securing your profits. Once the pullback comes here and we go higher, your stop becomes here. right? So all that will happen is that whenever it comes back there where your stop is, it will close you out in profits instead of in a loss. So I'm giving you some tips and tricks. This is all in relation to the stochastic, and I'm explaining as well why I have a 20 EMA to kind of give a guideline as to what price is doing. These are all fabulous strategies, and trust me, they allow you to clock profits. Right? So go back test it. I know you probably are asking, does this work with everything? I'm going to show you US 30 because I know a lot of individuals trade US 30. So let me show you US 30 and how it looks with US 30. So we're currently on our weekly time frame, just like what I did earlier. We know this is a support area, so you can highlight your support. There's nothing wrong with doing that because we were sitting here, we tapped it twice. So there is a potential for price to come all the way back down here, but we're currently sitting at our over sold section on the stochastic, as you can clearly see. I'll zoom in, and we're about to cross. So we're waiting for the crossover here. Once we cross over and the blue is now on top of the yellow, then that's our indication to buy, and we're going to be buying to the next level, right? The weekly is giving us the bullish perspective because we're quite bullish on US 30. Listen, if the stochastic RSI is at an oversold level and we're in a bullish trend, we're waiting on the stochastic RSI to cross over for us to take the next bullish move, right, to the previous key level. And the key level would be here at this moment, right? So I'll put this here. We're targeting here as a long run, but we're waiting on the clear indication for us to get the perfect entry into the market using the stochastic as the entry point, right? Backed up by price action. So this is a key point. I'm looking for it to come to. It may not, because the market does what it wants when it wants, and it's for you to respect that. So if we get the play before we're on the charts, and we're gonna seize the opportunity. So let's see how we can get in on this one. The perfect opportunity on. All right, so we got some bullish push and we've got a crossover. Now you can decide that, listen, all right, let me go down to my 5-minute time frame. So we're on the 15-minute, and as you can see, the 15-minute is also giving the indication that we're about to cross over as well. So once we do, with that, you take your trade and you're in on your buy, right? You're in on the buy. That's all you're waiting for, right? So you would be in the long position, catch your 1 to 3, be done and out. And of course, remember we said that we're targeting all the way up, right? All the way up. Let me see. At least a 1 to 3. Yeah. So we're in on this. And, we'll watch to see how it plays out with our 1 to 3 position. See if we can catch some profits based on what the stochastic has given to us, right? You got a nice crossover on the stochastic. Okay, so we're playing there, and then we've got that push, came back to entry. So listen, the higher time frame shows that we're going to be pushing up. Not everybody is going to have the guts to be in a trade and wait on it to go all the way up. So if you want to stick to your 50 pips profit, you can, right? But whatever the higher time frame generally shows, that's really what's going to happen. And you're going to have the market, as you can clearly see, it's now formed support at this entry point that we took the trade. Literally, we've got support here. So every time it comes back to entry, what does it do? It bounces back up. So you're not going to be waiting on it to break all of those to see if we can get a higher push, all right, to go higher. But this is generally how US 30 moves. So you can scalp it and make good profits with it. You don't have to hold or anything like that, You understand me? You can literally be taking your profits and be done with this thing. All right. Even if you decided that, listen, I just want to get a buy and close at 1 to 1, 1 to 1, and be done, or 1 to 1.5. Carry this up a bit. You'd be done. You understand? You'd be done. Even if you did 1.5. That's it. You'd be done. You understand? So don't sweat it. You just need some profits. All right. I know not everybody does 1 to 3, or not everybody has the guts to hold a trade. Yeah, because we can hold sometimes and lose. Yeah, especially if you're doing swing trading, you can hold and lose because it doesn't directly have to go where you think it's going to go. All right. But you would still be able to clock something off. And one of the key things that I encourage is if the trade is going in your favor, all you do, trail your stop. All right, secure your profit, secure your capital as much as you can. All right, so that's one on US 30. Let me see if I can find the precious gold. Gold has been, going into massive all-time highs. All right, so this is, let me pull up gold. All right, so should be seeing gold. Now, we are really respecting our trend line on gold. Really phenomenal stuff. We're looking for a crossover right here on the weekly for us to take a setup on our 5 or 15-minute time frame. Once we get that clear indication, right, that's the only time we get in. Only when the blue is on top and we've got that crossover. All right. So until then, we're holding our hands and we're sitting on them until we get an indication of our blue. And we got a tiny bit here. So let's see if we get a little bit more push to kind of show us upwards. There we go. And now we can get in on this one. Okay. Because guess what? Chances are we're going to break this high and create a higher high. So I'd be aiming from a 1 to 3 on this. All right. And generally speaking, when the market is playing on all-time highs and you don't have a clue where it's going because there's no previous zone, the Fibonacci works. We literally have a Fibonacci 3-day boot camp coming up. I'll drop the link below for those of you who want to register for that. Fibonacci Fantasy Bootcamp, where we literally teach you how to use Fibonacci to clock massive profits in the market. The Fibonacci is golden, I'm telling you, really golden. So in this regard, I'd be going down now because I got that crossover. So I'm going to be going down to 15 minutes. Let's go 15 minutes. All right, so we're in on the 15-minute on gold, and what we're waiting for is the crossover to be here on the 15-minute for us to take a buy, and we're basically just going to target this high here. So right here, okay, we're going to be targeting here because this was our previous high. So we know our low. We're waiting for the crossover. Once we get the crossover, we're going to be targeting 2017 as our massive take profit, right? And we're currently sitting at 27.05. So that's good amount of pips. But let's wait for that crossover. Okay. There we go. That's it. So we would take it there. We would take it here. So I'd be in the trade right there on a long position. I'd be taking my long position. Once we had the crossover right about here, and I'd be aiming for here. Tighter stop because I know it's going to push up to get my 1 to 3. Right? There we go. And let's see how it plays out. Playing at my entry. All right. There we go. We've clocked profits. There we go. All right. See how beautiful the playout is? And literally, we're done. So if you're really looking on, the charts, you just want to see that the opportunity is there for you to take something to the next previous level, and you just take it. You look for the highest probability setup. So really and truly, where we are on gold now, you can see we've just had a crossover. So I'd be in on a buy here. This is the real-time charts. I'd be on a buy here right now, right? I'd be taking, sorry, a buy, and I'd be aiming for gold to hit that level. So I'd put this here. I'm aiming for 1 to 3, so I'm gonna be higher, going higher. There we go, 1 to 3. Okay. Or you could do 1.5, 2.5, it doesn't matter, whichever you decide. All right, 1 to 3 we're aiming for as we've got the crossover. So that's something that you can pay keen attention to. We have been respecting the trend line. So one of the key things that I really want to drive home with you, if you're gonna be using the stochastic, use it alongside the trend. So if the market is bullish, only look for bullish opportunities, and the best entry point is when you've got that crossover at the oversold section. That's when you go in on your buy, right, to capitalize on great profits in the markets, right? So I'll keep you posted on this one. And while we watch how it plays out live, right, while we watch the live play out, we're still let me see if I can show you something that's in a downtrend, perhaps. Let's see what we've got. All right, let's show you Euro USD. Okay, so we know that this is a clear zone here. All right, I would be waiting on, this is the weekly time frame. I'd be waiting on a crossover. I could even take it from this area, but I'd be waiting for a crossover, right? Maybe a top of this zone and then a crossover on the stochastic as well, and then I'll be taking a sell back down to here on Euro USD. But let's see. Let's go down. Let's wait on it to cross over here first. All right, we're tapping over bought. There we go. Have some rejections. That's the tap. That's the tap, Kerry. We haven't crossed. We're waiting for the cross. Yeah, be patient. Sit on your hands if you must. Waiting for the cross to tell us when we've got some momentum to the downside. So nice formation here, just like I said, rejection of this box. And you have the potential to take a sell opportunity, right? So you could go for a short at this time, because I've been showing you a lot of buys. Literally go for a short and aim towards here to make your 1 to 3. Right? Adjust this a bit so you don't have such a big stop. There we go, 1 to 3. Okay, and we're targeting this area. Now, let's see if we can clock some profits on this. Based on what the stochastic gave to us as an entry point, we're already in profits. All right. So for me, I'd like to really just encourage you, even if you scale down to the lower time frame, let's say you're a day trader or a scalper, still gives you the opportunity if you only want to use that time frame. I generally go on the overall perspective of the market because it gives me more profits, right? Really and truly. So I like to take it from the weekly. You don't have to. You can literally use the stochastic on your 5-minute time frame and your 15-minute time frames. There are people who actually use it on 1 minute as well. You get the same vibe. All right, you get the same vibe. So literally, you'd be in profits at this moment, even if you just say, you know what, let me just be trailing my stop or whatever it is, or go risk free, depending on what your risk management strategy is. You could go all in. All right, but in my opinion, we're gonna be pushing down. So I'm holding and I'm not folding, and I'm believing that my trade is gonna go in the direction of here. All right, so I'm holding. And it comes with the patience, it comes with experience, and probably not even watching the chart that much as well. So setting it and forgetting it can literally be a mind-blowing strategy for those who are like really anxious when they're watching price movement. All right, so literally would already be up in profits. Beautiful play out on this, absolutely beautiful. And guess what? The stochastic gave us our entry point into the market, and we're looking to exit at this area. But while you're looking on that, you can also be paying attention to even your stochastic again to see when it changes, so that, listen, you can just take your profits and walk away. All right, so literally this is really a lovely way to use the stochastic. But I know I've been ranting all along. Remember, if this is helpful, just smash the like button. Smash the like button. If you appreciate all this value that I'm giving you as a newbie trader or as a trader who is struggling, smash that like button and drop a comment below so that I know you're getting some value from this, right? Drop some appreciation in the comments down below. Look at this beautiful play out. Absolutely beautiful. All right. So with that said, you really want to kind of use the stochastic. The major tip that I'm going to leave with you on this one is that you want to use the stochastic in alignment with the trend direction. The only time you're looking for the highest probability setup is when, if it's a bullish trend, you're looking for when the stochastic is at oversold and there is now a crossover, and you're actually watching price action to line up with the stochastic. So you're not just looking at the stochastic, but the stochastic now becomes an added confluence in your trading decision, if you get what I mean. Yeah, right. So literally, there are going to be losses, because there are always losses, but the majority of time, to be really honest, the majority of time it plays out in your favor. So those are the moves that you want to be looking at, and capitalize on them so that you can be making profits day in, day out in the financial markets, and you're not leaving money on the table. All right, and you're not leaving money on the table, you're just clocking your profits, and you're getting in at the right time so that the drawdown doesn't panic you, so that all those factors that probably will terrify you in normal days, because sometimes you're entering too quickly and you're not sitting on your hands long enough. But using the stochastic gives a clear indication of the best time to enter, along with what price action is giving you. So pay keen attention to that. And remember, trading is a process. It takes time. Yeah, you see how beautiful this one is? It takes time to develop the skills that you need as a trader. But the longer you do it, the better it will become for you. And understand that, listen, this thing, if you lock in on it 120%, it can literally change the whole family situation, the whole financial situation. And if you are really in a position where, listen, you feel like this is hard and you really need some assistance, you can click the link in the description below, sign up for Fibonacci training that's coming up, and literally even join our academy, because guess what, we've got a supportive team who is willing to help you on your trading journey. Now with that said, remember to hit the like, remember to hit subscribe, remember to turn your notifications on so that you're always notified once we drop a video over here. And always remember to put God first in every single thing you do, and guess what, it will come through. Because guess what? If God is in it, you must win it, right? And believe that you can do this. I know it's hard. I know sometimes you feel like giving up. I know you've lost some money. It's a part of the process. Just keep going. No looking back, because guess what? If you put your all into this and you lock in and you do the right things, your bank accounts will never look the same. Right? So I really want to encourage you on this trading journey as well. Just lock in on one strategy, right? If you have not found that right strategy as yet, just hit that Fibonacci class up and go all in, right? But with that said, this is the end of the video. I love you all. I appreciate you all, and what good.